All right, welcome to The Explainer. Today we're tackling a really fascinating one, SoundHound AI. This is a company that, depending on who you ask, is either the next big thing or it's teetering right on the edge of a cliff. It's a real two-sided coin, and we're going to flip it over and look at both sides. So you've probably seen the hype, right? The headlines are everywhere. Is SoundHound AI the next great AI stock? I mean, that's the big question everyone's asking. What's really going on behind the scenes here? Is this company the real deal, or is it all just market frenzy? Well, let's dig in. And to give you a taste of why everyone's so excited, just look at this number, 99%. I mean, wow, what is that? That's their year-over-year revenue growth for fiscal year 2025. When you see a number like that, you absolutely have to stop and figure out what's going on.
Okay, so Section 1, SoundHound's AI Ascent. First things first, what does this company actually do? Because it's a lot more than just another voice assistant app. They're aiming way, way bigger.
So here's the deal. SoundHound has this really powerful conversational AI platform. Think of it like this. They give big companies the tools to build their own custom voice assistant. And we're not talking about simple stuff like, hey, play my favorite song. No, this is the heavy-duty stuff. Complex conversations, back and forth, that can actually understand what you want and, get things done for you. All right, that brings us to our second section, the bull case. This is where things get really exciting. Let's look at all the reasons why people are betting big on this company becoming a huge success. So remember that 99% growth we talked about? Well, here it is in black and white. It took their revenue all the way up to almost $169 million. And this isn't some one-time fluke. It's coming from landing huge new contracts in all sorts of industries. We're talking automotive, healthcare, you name it. So you might be asking, how are they pulling this off? What's their edge? Well, it all comes down to their white label approach. See, with big tech options like Alexa or Siri, a company has to basically hand over its brand and, more importantly, its customer data. It's a walled garden. SoundHound says, no way. They let companies build their own voice AI under their own brand, and they get to keep all that valuable data for themselves. It's a total game changer. And you know what? This strategy is absolutely working. Just look at the automotive space. They are landing massive wins left and right. They're kicking out the old guard at iconic sports car companies. They're signing huge deals with Japanese and Korean automakers. The big car brands are literally choosing SoundHound instead of going with the usual big tech players. And it's not just about winning new customers. They also made this incredibly smart acquisition, a company called Amelia. And this is so important because it's shifting their entire business model. They're moving away from just one-off projects to the holy grail for software companies, predictable, high-margin, recurring software revenue. The subscription model. And just how big of a deal is this? Well, the Amelia deal alone is expected to bring in over $45 million in that sweet, sweet recurring revenue every single year. That is exactly the kind of stability and predictability that gets Wall Street really excited. Okay, so explosive growth, a killer strategy, major customer wins. This sounds like a slam dunk, right? A total no-brainer. Well, not so fast. This is where we have to flip the coin over. Let's get into Section 3, the bear case. And folks, there are some really dangerous signals here. Yeah, so what's the catch? There has to be a catch, right? Because for all the amazing things happening with the business itself, once you start digging into the financials, you start to find some things that are, frankly, pretty worrying. And here's problem number one, and it's a big one. Look at that number. Negative $103 million. That's how much cash the company burned through in fiscal 2025. So even with all that revenue pouring in, they are spending money way, way faster than they're making it. That's a huge red flag. So how does a company that's burning that much cash survive? Well, they have to raise money. And SoundHound has been doing that by selling more and more of its own stock. Now, here's why that's a problem for investors. Think of the company as a pie. Every time they sell new shares, they're cutting that pie into more and more slices. So even if the pie gets a little bigger, your individual slice just keeps getting smaller. It's called dilution, and it can be brutal for shareholders.
Okay, and then there's this. This might be the most concerning signal of them all. We're looking at a table of stock sales by the company's own top executives, the CEO, the CFO, the COO, the people who know the company better than anyone else. They've been selling off large chunks of their own stock. You got to ask yourself, if they truly believed the stock was about to skyrocket, would they be selling?
Now, for a while, a lot of these concerns were kind of pushed to the side because of one huge factor. They had the ultimate seal of approval. NVIDIA, the company at the absolute center of the entire AI universe, was a cornerstone investor. That was a powerful signal that the technology was legit. But then this happened. In February of 2026, the entire bull case got shaken to its core. Filings revealed that NVIDIA sold everything, their entire stake gone. Just think about that. The undisputed leader in AI decided it was time to cash out completely. And this is all happening while the stock is trading at what you could call a pretty sky-high valuation. We're talking a price-to-sales ratio of over 21. To put that in perspective, the average for the software industry is around 3.3. So you're paying a massive premium for this stock, a price that basically assumes everything is going to go perfectly from here on out. So this brings us to the verdict. How do you weigh these two completely different narratives? On one hand, you've got this incredible business firing on all cylinders. On the other, you've got a financial picture that looks, well, pretty scary. And really, it all boils down to this fundamental conflict. You've got the operational excellence, amazing growth, disrupting the big guys, executing flawlessly. And that's all true. But on the other side, you've got this financial peril. They're burning through cash, they're diluting shareholders, and you have these really toxic signals from insiders, and of course from NVIDIA. And this is exactly why the verdict from the source material is a hold. It's not a buy, it's not a sell. It's basically saying the risk and the reward are so perfectly balanced right now that it's impossible to call. This isn't something you'd put in your retirement account. It's a high-stakes speculative bet, plain and simple. So that leaves us with the billion-dollar question, doesn't it? Is SoundHound AI a truly revolutionary company building the future of how we interact with technology? Or is it just a financial house of cards propped up by hype and destined to collapse? I guess, for now, only time will tell.